All right, so today is Monday, October 19th, 2020. This is the end of day review for the live trading room. Here in the live trading room, we're trading the NASDAQ 100 futures. We trade primarily off of a 5-minute chart, and we're using the adaptive entry system as the primary source of our signals to know when it's appropriate to go long, when it's appropriate to go short. We summarize all of our trades. We actually track all the detail of our trades in a tool that we've created where we're tracking the entry time, whether it's long or short, the method, which signal is coming off on the adaptive entry system, and then whether or not we had a profit or a loss on that particular trade. We also track the drawdowns for future reference so that we can go back and kind of do some scaled evaluation of those drawdowns and whether or not we're using an appropriate drawdown for our trades. So here's the detail for today. I know many of you like to capture that detail from 7 a.m. Eastern to our last trade of the day was 3 o'clock Eastern today. Also Friday, I did not do the end of day review on Friday. So here's the detail from Friday. From first trade after 7 o'clock was at 7:20, and then the last trade we took was at 3:10. So take a look here. Here's Friday's information, and then here's today's information. But now you understand that we're looking primarily at two different categories, and we're evaluating these two different categories for the purpose of actually showing you and representing how that information should be plugged into a personal trading plan and how that personal trading plan is a useful tool for forecasting the amount of income you could potentially have from your trading over the course of a year. Now, there are a variety of ways to break down the data that we have. We can automate, we've automated the ability to go back and search, what time frame you might want to trade, which signals you might want to trade. But we've picked two categories. We did this several weeks ago when we started profiling this in the live trading room. And we evaluate trading from 9:30 to noon, where you're taking all 4 of the adaptive entry system signals. We also evaluate trading from 7 a.m. Eastern to 4 p.m. Eastern. Don't always go right till 4. Sometimes we cut off at 3 like we did today. Periodically, if we're having a really, really strong day, especially if it's the end of the week on a Friday, we might cut off a little earlier. But basically, we track from 7 to 4 or whatever we cut off, and that's taking just the trend bias trades and the continuation trades. So basically the trades that align with what the market is telling us it is wanting to do, the directional bias that it wants to move. And then we take that data and we plug it into our personal trading plan, and I'm going to go through that exercise for you right now. Friday, we actually lost 35.25 points, 9:30 to noon. That I was on 6 trades. Friday, our 7 to 4 category, taking just the trend-oriented signals, was down 4.25 points, and that was on 16 trades. And then today, we took 35 points of profit on the 9:30 to noon category, and we took 61.75 points of profit on our 7 to 4 trend bias trades. Now, if you're not familiar with the NASDAQ 100, each point that I'm referring to has a dollar value of $20. So when we lost 4.25 points on Friday, that's 4.25 times $20 per contract. And then of course, then it's the number of contracts that you're trading as the additional multiple. So I'm going to jump over to our personal trading plan. We've had this personal trading plan in play now for just over 15 weeks. And we've been showing in this end-of-day review for the last 15 weeks how the personal trading plan will forecast for you what your income could potentially be. So first of all, we got to do our data entry. Now usually I'm doing this every day. I'm going to do 2 days today. So we had minus 34.25. So 35.25 times 20 points, and we're trading 3 contracts. So Friday was a minus 21.15, and We did 6 trades, so that's 6 trades times 3 contracts is 18 contracts. Today in this category, we did 35 points, and so that's 35 times $20 a point per contract, and then we're trading 3 contracts, so today was positive 2,100. So Friday and Monday kind of netted each other out, but more importantly, we're going to show you what that means in terms of your full 12-month, 52-week forecast. We did 10 trades, 3 contracts per trade, so it's 30 contracts in total. All right, I want to do all my data entry here before we jump into doing an evaluation on the 2 different methods that we're profiling here. Friday, 4.25 points of loss times $20 is $85 times 3 contracts. So we did minus $255 on Friday. And we actually did 16 trades. So 3 contracts per trade is 48 contracts. And then today, we did 61.75 points times $20 a point is $1,235 times 3 contracts. Today we did 37.05. And we had 14 trades today, so 14 at 3 contracts per trade is 42 contracts. Okay, so let's evaluate where we are. I'm going to start with our 9:30 to noon category. This is this time frame was selected as a way to show what a limited amount of trading can accomplish. So limited being you've got a commitment of time from 9:30 to noon, and you might decide you want to trade a little bit more than that. You might decide you want to trade less than that. We can certainly help you any day in the live trading room understand what performance you could possibly expect from whatever time frame you choose to trade. Now remember, the NASDAQ 100 futures, it can trade 23 hours a day. We haven't tracked 23 hours a day, but we do track from 3 a.m. Eastern to regular market session close, which is 4 p.m. Or whenever we stop trading that particular day. So we can help you understand, if you're brand new, what to expect from any particular category, which I think is a very powerful feature of not only the live trading room, but this tool that Aaron created for us. Because what matters the most is what you can produce during the time frame you have available to commit to your trading. All right, so we're demonstrating for you 9:30 to noon. And the first thing we take a look at is these 4 numbers up here, the upper left-hand corner. We now have 15.2 weeks under our belt. So last week concluded the 15th week. So we actually have 37 weeks to go in our 52-week plan. We also know that out of those 15.2 weeks, we've had 26 days that have been losing days. Now, losing days, I will say the words don't really matter that much, but I'm going to explain what I mean by that. They, by themselves, don't have a significant amount of value. You've got to put it in context to what your overall performance is. So our overall performance is that on our winning days, we're averaging 22.55 points a day, and that takes into account the frequency rate of 26 losing days per 15.2 weeks. The original plan, before you enter any of your performance data, when you first start out, is based on averaging 1 losing day per week. So out of every 5 trading days, have 1 losing day. Obviously, we are ahead of that, so the frequency rate of losing days is greater than the original base plan, and it is just what it is. You know, that's the nature of what the trading has been like during this 9:30 to noon category. So our calculations here that are taking a look at winning days and average losing days take into account this frequency rate, this ratio of 26 days of loss per 15.2 weeks. Now, the most important thing we do with those values, because these are our run rates, is we plug them into our forecast information. So here, we're going to forecast the rest of our 37 weeks at the run rate values. So 22.55 is what we're going to forecast going forward for our winning days, and 37.72 minus 37.72 is what we're going to forecast going forward for our losing days. And those values assume a frequency of losses at the rate of 26 days for every 15.2 weeks. So those numbers right there are very valuable, but the most important thing for you to do after you've traded and after you've entered your data into the personal trading plan, the next most important thing for you to do is to make sure that your forecast is based on your actual run rate. You know, the fact that we have over 15 weeks of performance now in our personal trading plan says we've got a good amount of history. We've now kind of established a baseline for ourselves. If you're an individual trader, you're starting your own personal trading business and you've just traded now for 15 weeks, you have a good baseline of what you could reasonably expect in the way of performance from your own personal trading. You might decide that you want to improve your performance. That's fantastic. We would love to help you do that. You might decide that you've exceeded your expectations. That's fantastic. That's even better. Just keep doing what you're doing. Whatever you have done to date, though, should be forecasted forward so that your full 12-month forecast is based on what your actual performance has been. Now, we limit ourselves under this plan to no more than 3 contracts. So 3 contracts is our maximum number of contracts. I'll come back to that in just a minute. But based on our run rate forecasted forward, having started with $5,000 in the account, we have a potential income of $158,425. I say potential because, frankly, I don't know in the next few weeks or months how these averages are going to change. I don't know if maybe we'll fall back in line with losing days at the rate of 1 per week. That would dramatically improve our forecast going forward. I don't know if our average number of positive days and the average performance for those positive days may actually erode and decrease. I mean, you can experiment with it. What if your average positive days decreased from 22.5 to, say, 15? Well, then you can see what the impact to your income would be. All right. So let's just say that was a reality. It's not right now, but let's just say that was a reality. And how do you feel about that? Well, if you find yourself being discouraged because you saw a $158,000 number there, well, that might not be your reality going forward. However, let me explain something about contracts. You guys should all get this by now, but it never hurts to say it again. The number of contracts that the personal trading plan will present to you as the proper number of contracts for you to trade is based on 2 factors. Factor number 1 is whatever the current balance of your account, take 10% of the balance of your account and allocate that to contracts. For us at the broker that we trade at, Infinity Futures, each contract requires $500 of margin. So $500 of value in your account is required for each contract you decide to trade. So we're trading $1,500 of margin value because we have over $15,000 in the account. However, you might want to be conservative and limit the growth, the scaling of contracts to some fixed number. We've been using 3 just as a way to kind of demonstrate for you how this process works. But if you saw that let's just say hypothetically that your average performance had decreased substantially, but you still felt pretty good about what you were doing overall, you could increase your maximum number of contracts to, let's just say, 5, or you could increase it to 6, whatever you choose to do. That is going to dramatically increase the potential earnings. Now, somebody might say, well, Mark, if your performance decreased, why would you increase your contracts? Well, performance is what it is, okay? And as long as the number of contracts are first limited by no more than 10% of the balance of your account, if you're okay with that number as a limiter, then you might be okay increasing the number of contracts. So frankly, I think that if you traded 5 contracts, I'm just going to give this as my opinion, and if you started with $5,000 and this was your overall performance right here, and you ended up making $125,000 over the course of 12 months, I think you ought to be delighted. What I'm showing you is that there are ways that you can yet increase and influence the level of income that you have, even if your 15-week performance were to erode. Now, if it increases, obviously you could do so much better than that. What if it increases to 30? All of a sudden, your 5 contracts are giving you $347,000. Maybe you don't want that much or don't need that much, and you stick with 3 contracts. So bottom line takeaway here is make sure that your performance forecasted, which is right here and here, is based on your actual run rate, which are these 2 values right here. All right, so let's jump over to our other category, which is the 7 a.m. to 4 p.m. category, which uses only the trend bias and trend continuation trades. Now here, the numbers are a little different. First of all, you're trading a longer period of time during the day. Second thing, you're only taking 2 of the 4 signals that the adaptive entry system presents to you. And so we've had 17 losing days out of 15.2 weeks, right? That's getting reasonably close to the original plan of 1 day per week, slightly elevated, but our average winning day value is going to take into account that frequency rate, and our average losing day value is going to take into account that frequency rate. So we're going to adjust our winning day to 3.68. That's what we see as our run rate. And we're going to adjust our losing day to minus 24.17. I think I did that wrong. Minus 24.17. Okay. And based on 3 contracts, it gives us a projected income of about $339,000. That's having started with $5,000. So if you're up to trading a more extended period of time during the day, then these are numbers that actually could be real for you. And once again, you can influence the total outcome by decreasing contracts, maximum contracts, which would be ultra conservative risk management, in my opinion, or you could increase the number of contracts. Maybe you decide you're very comfortable with a 10% limiter of account value, and so 5 contracts is comfortable for you, and you could possibly increase your total income for a 12-month period to $500,000. I'm going to leave ours at 3, and what I want to talk a little bit about is averages. So here is a snapshot of some averages. Here's the one that I just shared with you. Okay, that's one of the 2 categories that we profile in the personal trading plan. And if we look back 90 days, 90 trading days. So remember, there's 20 trading days, about 20 trading days each calendar month. So if you look back 90 trading days, then you see that we have a $619.50 profit average daily. Okay, that's the average daily profit per contract, $619. That's pretty significant. That's just a flat per day, per contract, no scaling of contracts. In our 9:30 to noon category, we're averaging $348.50 a day. That's a reasonable amount of return, I think, for the investment of time of 9:30 to noon. And of course, you can scale the contracts to whatever you're comfortable with. Of course, that's close to $700 a day if you just traded 2 contracts and simply flatlined at 2 contracts. The best performing category we have so far, and we continue to evaluate this, is trading from 7 to 4 all signals. And that's giving us about $1,280 a day per contract. Now, This category down here that shows researching, this is where Aaron's built into this tool a feature where if you were to tell me that you only have time to trade from, say, 8 to 10, 8 a.m. to 10 p.m., we can plug those numbers in here, and we can tell you what to reasonably expect. We can't guarantee anything, but we can tell you what to reasonably expect. And so if you were trading all signals plus fractals, you could possibly be averaging somewhere around $365 a day per contract, okay? That's been our experience rate. It doesn't guarantee anything going forward, but that is our experience rate. If you decided you wanted to trade only the trend bias and continuation, it's $180 a day from 8 to 10. That's just those two signals. So there's a variety of ways that we can sort this for you. We could evaluate maybe someone who says, I don't have time in the morning when the market opens, but I have time starting around 11 o'clock. I don't know what this outcome would be, and I can trade until, say, 2 o'clock. So 3 hours of time commitment. There's a 3-hour time commitment right there that, based on 90 days worth of history, is averaging about $465 a day. So there's a variety of ways you can take a look at this, variety of ways you can slice it. I mentioned before that the optimum performing category was up here, taking all signals from 7 to 4. Actually, if you take all signals, including fractals, from 7 to 4, that is the top performing category. But it's not a fixed category for us, meaning we're not tracking that for purposes of reporting it on a personal trading plan. But you can see here that if you wanted to trade starting at 7 a.m. Eastern and you wanted to trade until, it's the category says 4 o'clock, but basically until we stop trading, which can be anywhere between 3 and 4 p.m. Eastern, then that gives you an opportunity based on 90 days of history, no guarantee going forward, but based on 90 days of history, it would imply the potential opportunity of $1,600 of profit per day per contract. And of course, you want to trade 2 contracts of that, ends up being a pretty significant number. And that's just, straight line trading 1 or 2 contracts every day with no scaling from the personal trading plan. So we put together a set of tools here that we think is very useful to help you understand what to expect in terms of performance depending on when you want to trade. We've put together a set of tools that include the personal trading plan, which helps you understand what your income could be over the course of 52 weeks. And of course, we have an amazing set of tools called the Adaptive Entry System, which will help guide you into the trades and understand when to get in, when to lock in a profit, and when to exit the trade. And then we're here in the live trading room every day. Michael, Aaron, and myself, at least one of us is here every day helping you understand how to interpret the signals, how to best adjust so that you can lock in a profit, and how to optimize your performance. We hear from people every day in our live trading room that they've made their plan for the day. That means that they're paying attention to the personal trading plan. They've hit their plan. They're done trading for the day, and they're going to go off and enjoy something, some other part of their life, or they may stay with us for a while and shift to a sim trading mode so that they can continue to learn and program that muscle memory and feel really confident with their trading. So I appreciate all of you being here, appreciate you being involved in our community, appreciate you listening. If we can do anything to help you, you just let us know. But we'll be back for trading again at 8:45 a.m. Eastern tomorrow.